So you have this closing disclosure document in your hands. I want to make sure that you know how to read it so that when you go to the closing table for your purchase or refinance, these numbers make sense to you. You know how to read it, and most importantly, there are no surprises in your loan documents. My name is Miles Pitcher. I'm the owner of Superior Lending. I've been at this for 21 years. The closing disclosure is a great document. It is very similar to the loan estimate that you've been receiving along the way. There are some differences. We're going to dive into it today and take a look at those. First of all, I want you to remember that there are many times an initial CD issued to you. This doesn't necessarily mean that you have clear to close on your file. There may still be a few more things, but congratulations are in order because that means that your file has at least been underwritten and everything looks like it is in line for you to be able to close on this loan shortly in the near future. Before we begin, can you do me a favor and subscribe, hit that subscribe button and like this channel or like this video. All right, let's run through this closing disclosure. Now, this is actually a client of mine that we closed a few weeks ago. And if you watched my prior video that took you through the loan estimate, this is the closing disclosure for the same client. And so a few things you want to do is you always want to make sure that, hey, is your name showing right? And then the loan terms, purchase, fixed, all those things are still in line with what you expected. Loan ID and MIC, those are internal tracking numbers for the loan. Lender's going to be here. Now your seller's info is going to show up. And then here's your sales price. Make sure the property address is correct. This looks very similar to the loan estimate. There will be some differences. So if you're used to reading the loan estimate, this will be pretty easy, but double check your loan amount. Make sure your rate is where you're expecting. There's your principal and interest. And again, here's the column on can they increase after closing? And you just want to see and be aware if they can or not. If you're doing an adjustable rate, then yes, that can change. Pay attention here. Make sure that these have no prepayment penalties, or if they do, you're aware of those. All right, down here to the payment, just the same as the loan estimate. We have the first 6 years because this has mortgage insurance. Sorry, I highlighted the wrong one. There's the mortgage insurance. And then year 7, that mortgage insurance drops off. And that's why it's broken out in 2 different ways there. Then down here, so at this point, your closing estimate, there can be an initial closing estimate that still doesn't have final numbers, but right before your closing, this should all be dialed in and be exact. So this number right here, your escrows, should definitely have the actual property taxes. Homeowners insurance, you can see that this one does not have homeowners insurance because it's paid by the HOA dues. So in this guy's payment, it's just property taxes. In the escrow, yes. Okay. So again, the closing cost will be itemized on the next page. We'll go through those. And cash to close, the big number, right? So I always make sure with my clients, is your cash to close what you were expecting? Payment, what you were expecting? Is the rate what you were expecting? And that's what we double check. All right, here we go. Second page. Again, box A is what really your underwriting fee, your origination charges. If you're buying down the rate, discount points, there could be an admin fee to the lender's company. Those all go in that box A. B is going to be items you didn't shop for, such as your appraisal. Now I need to stop here and make sure I show this to you. Different from the loan estimate, we now have 3 different columns here on this page. We have borrower paid, seller paid, and we have paid by others. Okay. For you as a buyer or doing a refinance, this borrower paid column is really what you're paying attention to. There will be things showing up in the seller paid if this is a purchase transaction, and you can just see those. But really as a buyer, this is where you are focused and your numbers in here. So again, back here to section B, you can see the numbers here. They really didn't change much from what we estimated for this client. And then in box C, we have all of the title company fees in here. And they all total up here at the bottom, $4,500. Now, we have our other costs, and these are really kind of what goes into the escrows. So recording fee with the county. And now we have an exact on how many days, because we're going to close on the 22nd and we need to cover the interest for the rest of the month. So since this client's closing September 22nd, this covers interest to October 1st. They are not going to make a mortgage payment until November 1st. And why is that? That's because in a mortgage, you pay in arrears. Think of it this way. As a renter, when you hit the first of the month, you write the check out to the landlord that covers that month. So October 1st, you write your check out to your landlord, you pay for the month of October, you pay in advance. On a mortgage, it's different. So when we reach November 1st, you're going to be paying the interest and the principal due for the month of October. You pay for the past. So that's why you hear people say you get to skip a payment. So this covers from September to October 1st. And then when you reach November 1st and you make your first payment, you write out your first check, it's going to go back and pay for the month of October. You really don't get to skip a payment. It just means you're not writing out a check on October 1st. I hope that makes sense. Now it's going into the escrow account. Again, I mentioned this client has no homeowner's insurance because that's covered by the HOA. Some HOAs are expansive enough that they cover that, not only the outside of the buildings, but they cover what we call walls in. Property taxes, you can see they're $108 a month and they're gathering 13 months. I'm going to show you here in a second where there's a credit that comes or an adjustment for that, because the owners, the sellers have owned that property from January 1st up through September 22nd. So they're going to give a credit to our client to cover that time period. Now, this is different than the loan estimate. Down here now we start showing our real estate commissions, any HOA fees that are due, like even an HOA transfer fee, and then the seller's agent commission. And you can see how these commissions to the realtors are in a seller paid column. They're not in the buyer side column, because typically real estate commissions are paid by the seller and not by the buyer, including the commission to both buyer and seller's agent. Here's that HOA fee. All right, so on the buyer's column, our prepaids or escrows total up right there. So we from the closing cost plus our prepaids, that's how we get our $65.50 right there. Sorry, $65.55. Then there's a small little lender credit, and that can be small, that can be big. It may not even be there at all. But if there is a credit from the lender, it shows up at the bottom of page 2. Let's go. So this is the cash to close page. This is a good one here, in that we show what our loan estimate was and what our final CD was. So this is going to lay these side by side. Typically, we are overestimating on our loan estimate, so they go down. From our seller as a seller, and then other AC, which are up here, our credit seller, they're down here. See that our cash to close actually went down from what we estimated. And that's primarily because the title insurance, the owner's title policy is paid by our seller in this case, and that was removed. And there's some credits for the property taxes. So let's hop down here. Look, so over on the right, we got the seller side. And this is going to be a limited view onto what the seller's side looks like, but we really want to just focus on the borrower side. So here's our price. And again, our closing cost number and prepaid number from page 2 comes right here. Now, right here is a charge for the HOA fee of $43. Why is that? And that's because the seller paid the HOA fee for the month of September. So we're going to reimburse the seller $43, covering from the day our loan funds to the end of the month. Okay. Now here's our credit side, or what the borrower has already paid. So we have our earnest money, we have our new loan amount, we have our seller credit of $5,000. And right here you can see is our credit for the seller, covering property taxes from January 1st through September 22nd. Okay. Now, you may get a CD very early on in the process. Does that mean that your loan is ready to close? No, not necessarily. It just, a CD has to be in your hands for at least 3 days, and we're talking business days, but Saturdays count also, prior to being able to close the loan. And that pertains to a primary residence. Investment properties are the same way also. So the CD has to get out. Sometimes they don't have, we call them prorations, and that's where they are calculating the days of interest, the credit on the property taxes. Those haven't all been properly adjusted. So you can look at this section right here and see if the credit from the seller on property taxes has been put in there. Double check, make sure it's accurate, and see if it's there. Just know that if you are going to closing the next day, you better have a finalized CD. I do not let my clients go sit at the closing table without having this finalized closing disclosure in their hands before, and also do a review with me so that they fully understand every single number. Because the numbers in this closing disclosure, once finalized, are what all the loan documents are based on. So if these numbers are right, signing the loan documents becomes very easy. And I never want my clients having a surprise or really even a question when they go to closing. We want to make sure that they have everything lined out beforehand. So back here, these sections. So we take these two sections on what's due, what's already been paid, which includes the new loan amount. The difference is what the client has to bring in, the $50,000, and that ties exactly back in. N is all on the seller side, and it is really just a balancing side, and you can see the cash to the seller. Again, they may have other loans and things that they're using to pay that off, but that's what's going to get transferred to the seller. Couple of other pages here, similar to the loan estimate, if that can happen, a demand feature, or that's like an early balloon payment, late payments, amortization. I have not seen these for years and years. Most of the time, these will not have those if you're doing a traditional mortgage. So payments is a big deal. So you need to pay attention to this. So a lender can say, we do not accept partial payments. Okay. And what that means is basically if you pay half your mortgage payment on a biweekly basis or something like that, they're not going to count the payment made in full until you've made the two halves. So that's good to be aware of. You right here will identify the exact property interest or property address that is going to be the lien or escrow account. So yes, you will have one. It's also called an impound or trust account. There's lots of names. This gives you a breakdown of what's happening over year one, okay? And then non-escrowed, which would be your HOA fee right there, because that's not part of the mortgage payment. And then here's the initial, and then again, a repeat of what the monthly escrow is, okay? And if this box is checked right here, you will not have an escrow account, and it'll say reason why, okay? Hop into the next page. This again is very similar to the loan estimate. We have our APR and our total interest percentage. We have our total payments, finance charge, and amount financed, okay? Words on appraisal. You are required to have received that appraisal ahead of time, 3 days before closing. If you did not, the closing will be delayed, or you have to sign a form that says you waive that 3-day right for them. This is a contract, and these go through what happens if you don't make payments, you default on the loan. If you get foreclosed on, this goes through a few things on there. And again, the refinance in here just says you are able to refinance in the future, but there's no guarantee that you're going to be able to qualify, or the market will be favorable to being able to refinance. Again, tax deductions. This is really talking about, well, there's been changes to whether your mortgage interest is deductible. So you really need to talk to your CPA, tax advisor, on if you can write off your mortgage interest. These are the parties involved in the transaction: buyer side, seller side agent, title company, escrow company, attorney, those will all be there. This will have name, address, license numbers. Now let's talk about this confirmed receipt. We've talked about the 3 days. You have to receive that initial CD, acknowledge, and get the 3-day clock ticking away and make sure that that passes. So if you sign this, the initial on Monday, that means you can close 3 days later on Thursday. Can there be multiple CDs issued and reissued to you after the initial one? Absolutely. Does it restart the 3-day clock if they reissue? Typically, it does not. There are only a couple or three circumstances in which it restarts that waiting period. We rarely run into those, but they are, like, for example, if the APR increases more than 1/8 on the loan, then yes, you have to start the clock all over again. But very, very rarely does that happen. So I'll hop back to the beginning here. All right. Thanks for checking this out. I hope this totally helps you be more comfortable with the closing disclosure. Again, you should be used to it from the loan estimate on how to read it. But this is, I want to say this is the law, right? Verbally, what your loan officer or someone else may have told you, not that they're trying to deceive you, but what's on this closing disclosure and in these documents are what you're signing and agreeing to. So make sure you know how to read this. Thanks for watching the video. Let me know how your experience has been with your closing disclosure. If you have any questions or comments or thoughts on the CD, please post those down below. I will also post a link to the loan estimate video that we did if you haven't seen that yet.